So once again, very good evening, everyone, and welcome back to the session. So as we know, we are in the second day of the crash course, and we have already done the area of audit risk as well as risk of material misstatement with analytical procedures. So as part of our AAA syllabus area, in addition to the area of audit risk, well, we know that there are multiple other risks that we have to consider in each of the scenario. And especially with regarding the session, we have got one of the important area called business risk. So today we will be starting with the area of business risk as it's one of the key area for our examination. So, well, what do you mean by business risk? And the business risk, what do you mean by business risk?
Factors to achieve company objective.
Yes, it is a possibility that in some situation, a company will not be able to achieve their objectives, or they might not be actually be able to execute their strategy. And that will be the situation called business risk. Well, we know that there will be several situations, or there will be several circumstances, or sometimes an action taken by the management, or an inaction which have not been actually taken by the management. All this will affect a company's objective. Say, for example, if our institute have actually planned to attain a good level of revenue by the next year by running offline classes. And unfortunately, Corona have affected our business and we are now not able to run the offline classes. So in that situation, definitely we won't be able to achieve our objective. And that situation can be called as a business risk as it affects a company's operations. So this is the term which we use for mentioning the risk that's called business risk. And mainly the business risk will arise due to three reasons. Number one, finance risk. Basically, if a company is not able to make their payments to the suppliers on time, if the company is having negative operating cash flows or operating losses, if they are not able to meet the sufficient requirement for raw material, if they are not having adequate level of inventory in their warehouse to meet the customer requirements, in all this situation, it will result in risk, and it can be mainly be categorized into three types called finance, operational, and other risk. So mainly starting with the finance risk, as we initially mentioned, if the company is having any financial difficulties that might affect the company's objective, that will be finance risk. And anything that affects a company's day-to-day operations will be included within the operational risk. Like, as I mentioned, if the company is not having adequate raw materials, labor, or if there is any sort of mission breakdowns for the company, this will all result in operational risk. And finally, compliance risk or other risk, which includes non-compliance with laws and regulation and companies incurring high amount of penalties or fines, or if the company is facing any sort of going concern difficulties, maybe due to some of the violations of law and regulation, or maybe because of the cash flow difficulties, all which will result in other risk. So these are the three components of the business risk. But it is not necessary to consider any of those while attending the question. You just only want to keep one thing in mind. So whatever that affects a company's business or company's objectives can be categorized as business risk. Is that clear, everyone?
Yes, sir.
Okay. So basically, the examiner will be asking you to identify and explain business risk in the scenario. So when the examiner asks you to clearly identify and explain a particular business risk from the scenario, you should always focus on identifying the business risk. Then you have to explain it. You have to explain how does it actually constitutes a business risk. And finally, you have to show the impact. Basically, last day we studied about the audit risk, and while writing the answers for the audit risk, as we mentioned, we must always be showing the impact on the company's FS. But on the other hand, when it comes to the business risk, instead of showing impact on the company's FS, we will be having the impact on company's objectives. So literally, we can show the impact over the company's cash flows, the impact over company's revenue, the impact over company's profit or margin, the impact over the company's going concern ability, the impact over company's reputation or brand name, etc. So we'll be showing on the impact like this. So say, for example, it may be mentioned in the scenario that the company is getting the whole of their inventory or their whole of the supplies from a single supplier. So if it is clearly mentioned that the company is getting whole of their inventory from a single supplier, then we can always consider the possibility of their risk there. Because if there is any delay that is being made by the supplier while supplying the goods, there's always a possibility that the company will not get sufficient inventory on time to meet the customer demands. And in case of stock out, the customers will be dissatisfied and they will never try to agree any further contracts with the company, and there will be loss of revenue for the company. So this is what comes as a business risk there. Or else sometimes consider if there is any violation of law or regulation by the company. So if there is any violation of law and regulation, definitely there will be significant amount of cash outflow that will be incurred from the company in the form of penalties and fine. In addition to which, if the company want to comply with the law and regulation, there will be additional costs being incurred relating to that. It will also create significant cash flow difficulty for the company. So that can be called as a business risk. So whenever you write the business risk, always think about a possibility whether that particular risk will affect a company's operation or company's financial ability, or in any manner in achieving the company's overall objective. And if it affects any of this manner, then we can call it as a business risk. And we should show the identification part clearly, which is nothing but you can use the same fact mentioned in the scenario. Then you have to properly explain it, and you have to give the reasons for considering it as a risk. And finally, you should also show the impact over, as we mentioned, cash flows, revenue, profit or margin, going concern, reputation, and finally over the company's brand name. Clear, everyone?
Sir, business risk and risk of material misstatement is
Normally, we used to get the questions like that. So whenever the examiner asks us for business risk, it will be a combination of risk of material misstatement and business risk. And most majority of cases, they will never ask for the audit risk. Instead, they will ask for risk of material misstatement and business risk together. Okay?
Okay.
Business risk
Okay.
Yeah. So let's do one thing. In the same manner as we discussed the audit risk yesterday, we will also discuss a sample of business risk, which we have already done in our class. So we'll just quickly revise that. So I have already shared this file yesterday, and we'll be going through the same file today. So it may be mentioned in the scenario that the company is having some sort of international operations. Maybe they might be selling in another country, or they might be acquiring another franchise in a country. So if a company have got overseas trade, definitely there will be multiple risks arising due to the overseas operation. First of all, basically when a company is operating in another market in an overseas country, definitely they have to follow both the law and regulation of their local governing body. In addition to which, they must also follow the local law and governance of the overseas country. And if they are not familiar with the law and regulation, definitely there can be chances of having violation, and this might incur affecting companies' objectives because there will be significant penalty and fine or going concern difficulty will incur for the company. Same as that, when we manufacture and sells only in a very small market, automatically the political and economic stability will not be much significant since they are operating only in a very small market. But when company operates in multiple countries, or when they operate in the overseas market, definitely they need to consider the instability in the market. And if the instability in the total overall market is very high, then automatically there can be chances that we might not be able to plan and budget things properly. So it might also affect the company's operation. And finally, definitely as we know, whenever a company manufactures in the overseas country, definitely they might be performing their transaction in another currency. And it might also invite foreign currency exchange issues because the profit and the income of the company will be volatile as there are changes in the market rates. So this is what we need to consider with regarding international operation. So if it is mentioned in the scenario that the company is having international operation, then automatically you can recollect 3 risks in relation to that. Number 1, non-compliance with overseas laws and regulation. Number 2, political and economic instability in the overseas market. And number 3, foreign exchange issues. Clear? Yeah.
Yes, sir.
And as I already mentioned, if it's mentioned that the company is getting all of their supplies from a single supplier, there is always a possibility that if the supplier does not ship the product on time, it might result in lack of adequate inventory in their warehouse. If the stock out of inventory occurs, then automatically they might not be able to meet the customer demands. The customer will be dissatisfied and there will be loss of revenue for the company. And again, regulatory issues. So consider that if it is mentioned in the scenario that the country have introduced a new law and regulation. If any of the country have introduced a new law and regulation, there's always possibility for two risks there. Consider that we are complying with the law and regulation. So if they need to comply with the law and regulation, sometimes they might need to spend significant amount on capital expenditures. So which might result in significant cash outflow for the company, and company might face cash flow difficulties. Again, if they does not comply with the law and regulation, what will happen in that case? They might need to face penalties and fines due to the non-compliance with law and regulation. Clear? Okay. So if they comply with the law, they might need to spend expense on capital expenditures, or if they're not complying with the law, they might need to spend amount on fine and penalties. Again, if there is any legal claim against the company, suppose if the company have violated with any of the law in relation to the environment protection, automatically there will be reputational damages for the company, and they already signed contract with the customers might be cancelled by the customer end if the violations appear to be factual. And at the same time, there can also be chances of having additional penalty and fine in terms of violation of law and regulation. It will also occur in that case. Again, consider that there is diversification and rapid growth in the market. So if a company is currently operating in a particular industry and they are planning to diversify their operation into another industry, when a company diversifies their operations, automatically there is a very huge risk incurring. Because if a company diversify their operations into another market, there's always a possibility that they might not be familiar with the new market. So which would result in operation issues for the company. Their existing operations as well as the new operations will be affected. In addition to which, whenever it's mentioned in the scenario where a company is planning to make significant capital investment, especially when they diversify their operation, they might need to spend huge amount on capital expenditures. So definitely there will be significant amount of cash outflow for the company, whereby the company might face cash flow difficulties. It will also affect in achieving the company's objectives. Okay. Again, it may be mentioned that the company might be having very few customers. So when a company actually has very few number of customers, there's always a possibility that the customers will be having high purchasing power. So in order to retain the customers, well, the customers know that we are having very less customers. So they clearly understand the fact that it is our necessity to have them. So automatically they might be having high bargaining power, and due to which we might need to reduce the price of the product to retain them, and it would create loss of margin for the company. Then, suppose if the company's directors have changed, maybe we might have appointed some of the new directors. In that case, we know that it will take a significant period of time for the directors to get adjusted with the company's operations. So during that time, if they have taken inappropriate decision, then it might automatically affect the company's objectives being achieved on time. Again, sometimes it may be mentioned that our company might be operating in a very strict regulatory market. So automatically in that situation, we might need to comply with multiple regulations to sell our product. It may be clearly mentioned that the company might need to take license before the products are being sold to the customers. In that case, if the company have not received the license, which the company have applied for, automatically the whole amount which the company might have spent on research and development might go worthless, and the company will not be able to sell product to the market, and which will also affect the company in achieving their revenue related objectives. Then sometimes there can be chances that there will be court case and bad publicity for the company. So if there is any court case, definitely, as we mentioned earlier, the company might need to pay significant amount on penalties and fines. In addition to which, if there is court case, there will be reputational damages for the company. Some of the customers of the company might not be willing to continue with the existing trade contracts. So we might lose customers as well. Again, sometimes the company might be using some other company's brand name to operate in the market. So if a company uses another company's brand name, there are multiple risks associated. The first thing is that when we acquire another company's brand name, definitely we need to pay significant amount for that. So for which there will be huge cash outflow. Again, whenever there's a cash outflow, there's a possibility that they might face cash flow difficulties. In addition to which, when a company uses another company's brand name, If something is done by the other company in a wrong manner, automatically it will affect the brand name and we will not be able to recover the expected revenue through that brand, as it will affect the purchase brand name also. So we won't be able to get the adequate return on investment that we expected while we investing on that brand. Again, the company might be using some of the skilled employees to perform their operations. Especially, it may be mentioned that our company might be using significant number of skilled persons in our research and development team. And some of the employees might have left the company to join the competitor entity. So if any of the skilled employees have joined the competitor entity, automatically we are losing the competitive advantage. At the same time, since they are very much familiar with the market as well as with our business model, if they join the competitor entity, the competitor will easily attain the competitive advantage and they will be able to meet their objectives and we won't be able to sustain in the market. Then it may be mentioned in the scenario very clearly that the company might be operating in a luxury market and they might be having only one product and they might not have diversified their operations into any other industry. So whenever a company operates in a specific industry, and if that industry faces any of the economic crisis, there is always a possibility that the company might not be able to continue with their objectives, as well as they might not be able to meet the required sales target. So if the company is still not planning to diversify their operations, automatically there can be chances that the company might end up with nothing. Then, if a company is expanding their business, that too if they take the bank loan for the purpose of expansion, well, we know that in case if a company want to expand their operations by taking bank loan, definitely they have to lend a significant amount of money to get the operations done. So if the company takes a significant amount of bank loan, there is always a possibility that they might breach the existing loan covenants. And if the existing loan covenants are being breached by them, then they might need to pay back the whole amount of the existing loan in no time. So automatically, there will be possibility that they might face cash flow difficulty or operation issues if they need to pay the whole amount in lump sum. Then, and finally, if this expansion also becomes an inappropriate strategy, the whole amount invested for that project will be worthless. In addition to which, the existing liability will be outstanding and the company might need to settle that as well. So the company might face significant cash flow and operational issues. And they may be specifically mentioned in the question that the company need to follow some sort of regulation, maybe relating to the advertisement or relating to their manufacturing process or in any manner. And if something is mentioned in the scenario that signifies that company have violated those regulations, automatically there's possibility that the company might need to pay significant amount on penalties and fines, which would affect the company's cash flows. Then, if the company is spending significant amount on research and development. So when a company spends significant amount on research and development, first of all, the main thing is that even though they spend the whole amount on research and development immediately, they will take a substantial period of time to recover back the whole amount, as the research time will be very significant and it will take a substantial period of time to market and sell the product into the market. So during this time, the company might face cash flow difficulties. In addition to which, if the research and development phase is not completed appropriately as planned, the company will never be able to recover the amount spent on research and development. Then, if it is clearly mentioned in the scenario that there are sort of patent infringements that are being faced in the market, maybe mentioned like the company is having a lot of patent, in addition to which the competitors are also having patent, and it is very common to have patent and being infringed by the others. So in that case, there is automatically two possibilities arising. First thing, there can be chances that we might have infringed some other company's patent, for which they might file case against us, for which we need to pay significant amount on penalties and fines. In addition to which, our patent might also be infringed by others, so for which we need to file the case, and it will result in legal expenses for us. So it might also create cash flow difficulties for us. Again, sometimes there can be chances that the company might not be having adequate fund to spend on research and development. So if the company is not having adequate fund to be spent on research and development, the whole amount spent till the date will be worthless because they won't be able to continue with the further research and development work to be completed. So the intended product will not be able to be sold to the market. Again, the company might be operating in a high technology and competitive industry. So if a company operates in a high technology and competitive industry, then well, we know that the market will keep on changing. So in order to sustain in that market, either we need to spend significant amount on research and development, which would result in significant cash outflow for the company, or else the company need to do one thing. They might need to reduce the price of the product to attract the customers. And in case if they reduce the price of the product, what will happen in that case? Automatically, if the price is reduced, then the margin of the product will also be reduced. Then finally, clearly, if it is mentioned that we are purchasing product from a foreign supplier, if we import products from a foreign supplier, the first thing is the fact that if the foreign supplier is being used, then automatically we might need to spend significant amount on exchange. We might need to spend significant amount on exchange rates. So since if the company is not using forward exchange contracts and other related security measures, automatically the profit and the expenses of the company will become volatile, as we will be paying different amounts to get the same inventory over different periods. Again, if we are importing products from another supplier, definitely there is a possibility that if it's a foreign supplier, the cost of transportation will be very high. So automatically the profit will be reduced. In addition to which, if the supplier is not willing to provide products on time, or if there is any other import or other issues arising in the market, then the company will not be able to meet the demand of the customers, and there will be customer dissatisfaction as well as loss of revenue and goodwill of the company. So this is what we need to consider, or this is a way in which we need to consider while writing business risk. So there are no standard format. There are no standard explanation. So these are the risks that have already been asked in your prior exam. Literally, we have taken many of these risks directly from their past answers, as well as from your revision kit, as well as on the basis of common sense. So purely, this is how you need to explain that. Even the examiner also have explained the same. Well, there are no specific standards to be used here. Well, we know that while writing the audit risk area, we can definitely consider using standards, because on the basis of accounting standards only, we are interpreting each of the risks. But when it comes to the business risk area, here clearly we are writing on the basis of judgment. So consider whether there is anything mentioned in the scenario that affects in achieving a company's objective, whether there is something in the scenario that affects the company's financial ability, whether there is something in the scenario that affects the company's day-to-day operation, or create complaints-related risk or any other related risk. So this is what you need to consider. So go through each of the scenarios very properly and very thoroughly, and try to pick all the risks from the scenarios appropriately. Is that clear, everyone? Okay?
Yes, sir.
Okay.
Yes, sir.
So this is how you will be picking each of the business risks. And again, do consider one thing. While reading business risk from the scenario, always and always try to directly pick the actual risk that exists along with the business risk, which means there can be chances of having risk of material misstatements also along with the business risk. So try to pick the risk of material misstatement associated with each of the business risk. Say, for example, if a company is having international operation, so which will be the risk of material misstatement that appears there? When a company have an international operation, what will be the risk of material misstatement associated there? Is there any risk of material misstatement?
Foreign exchange.
Yes, foreign exchange transaction, which is IAS 21, right? So yesterday we discussed that whenever it's mentioned in the scenario that the company have got foreign currency transaction, we can mention that all the foreign exchange transactions should be recorded at spot rate. However, there can be chances that the company might not have recorded it at spot rate. Inappropriate exchange rate might be used, which would result in understatement or overstatement of expenses and payables. In addition to which, we can also mention that at the year end, the foreign exchange transaction monetary assets and liabilities should be retranslated using the closing rate and should be recognized in the P&L. And however, there can be chances that either they might not have retranslated it or they might have recorded it within the OCI. So we can record the related risk there. Clear?
Yes, sir.
Yeah. Say, for example, when it is mentioned in the scenario that the company have got a regulatory issue, what will be the case there when the company have got a regulatory issue? Which will be the related risk of material misstatement?
Provision.
Yes, IAS 37, you can mention about the provision. Then any other risk?
Impairment.
Yes. If there is any regulatory changes in the market, it represents the possibility of having an indicator for impairment. And even when there is a legal claim relating to the company, what will be the risk there? with regarding the
IAS
please?
Yes, 37.
37, 36.
Yes. They can be chances of having IAS 37 and
Yes, 36.
yes, IAS 36. Again, IAS 37 and IAS 36. What happens when there is a diversification or rapid growth?
RS 8.
IFRS 8. Because when there is diversification, when a company operates in a separate industry, it shows the possibility of having
Adequate.
Operational segment.
Operational segment. And that too, you should write this risk only if it's a listed company. Okay. Well, we know that the operating segment will be classified only for listed company. So you have to clearly read the introductory paragraph of the scenario. So basically, when the introductory paragraph, it might be mentioned that the company is either a newly listed client or a listed client. So you have to look there and only write the diversification point. Okay. And when there is licensing of product, if there is something mentioned in the scenario that affects the licensing of product, what will be the related risk there?
IAS 38.
IAS 38, because if the company have not received license for the product, it will not meet the criteria for capitalization. Therefore, the expenses have to be treated as revenue expenditures instead of treating it as capitalization expenditure as intangible asset. The same risk will also be applicable when it is mentioned with regarding lack of future funding available for research and development, because it's a lack of resources available to complete the research and development process. So it will also not meet the criteria relating to IAS 38. Clear?
Yes.
Okay. If it's mentioned that the company is operating in high technology and competitive industry, what will be the related risk there? If the company is operating in a high technology or competitive industry?
Obsolete inventory.
Yes, the inventory might get obsolete or slow moving very quickly as there are significant changes in the market. So what will be the related risk in relation to IAS2? Inventory should be valued at lower of cost or NRV. There can be chances that it might not be done appropriately, leading to overstated inventory and understated related expenses. Yes, exactly. So this is how you need to pick the risk. So better you can do one thing. In earlier classes, I've mentioned you, like in case if you want to pick the risk, you can use 3 colors while identifying the risk. So now it's not required actually. So while reading the question itself, always give 2 heads. Give one heading for business risk and one heading for risk of material misstatement. Separate heading for business risk and risk of material misstatement. So when you read the scenario and when you can find a business risk, directly copy that one and paste it under the business risk. When you pick a risk of material misstatement, copy it and keep it under the risk of material misstatement head. And if there is something, maybe violation of law and regulation, which would result in both the business risk and risk of material misstatement, copy that and paste it under both business risk and risk of material misstatement. So do the same for all the points. And after including all the points under business risk and risk of material misstatement, what do you need to do the next? You need to order it on the basis of its significance, as we learned yesterday. So what are the criteria that we need to consider while making it in an order?
Fraud.
Consider the possibility of having fraud, then changes in
Recent
economic,
accounting
and other developments. Then we need to consider whether there is any possibility of having related party transactions. Then unusual transaction, complex accounting treatment. Yes.
Degree of
Subjectivity. So these are the factors have to be considered while ordering the risk of material misstatement. Is that clear, everyone? Paka?
Yes, sir.
Okay, fine. So let's do one thing. let's just go through the scenario first. Okay. So everyone, please do one thing. Please start reading the introductory paragraph. Please do go through the introductory paragraph now. Okay. Connolly, please read the introductory paragraph aloud. Let me know once you're done, okay? Done? Okay.
Yes, sir.
So you are the audit manager in Davis & Company, responsible for the audit of Connolly Company, a listed company operating in the pharmaceutical industry. You are planning the audit of financial statements for the year ending 30th September 2015. You are provided with the following exhibit. Number one, an email which we received from the Ali Stone, the audit engagement partner. Again, there's a background information about the company's activity. Then we have received meeting notes from Ali Stone and the finance director, key financial information and other things. And they have given us a requirement that they have asked us to respond to the audit engagement partner's instructions. So this is what we have received from the introductory paragraph. So as I mentioned, we have got an engagement partner's email. So we have to follow whatever things being mentioned in the email. So whenever you get an introductory paragraph, always try to pick main things, like you have to consider whether it's a new client for the audit firm. Then you have to consider whether it's a listed entity or not. Then again, you have to consider the year end. The year end is very important because whenever you get dates in the scenario, you have to match the dates given in the scenario to the year end date. Because sometimes the date appears in the scenario might be after the year end. So that have to be treated sometimes as an events after reporting period. So to consider whether it's an events after reporting period, to consider whether it's a new client, or whether to consider whether it's a newly listed entity. And in all those cases, we require to have the year end date. So always make a mark of the year end date. Then we'll just do one thing. We will start with the partner's email. So we have received the email from the audit engagement partner, and it is to the audit manager, and the subject is audit planning of Connolly Company. You need to start planning the audit of Connolly Company. And to help with this, I have provided you some relevant information. I held a meeting yesterday with the company's finance director, and we discussed a number of issues which will impact the audit planning. I also spoke with a representative from the audit committee regarding a request for additional service Connolly Company would like our firm to provide. Based on the analysis I have done on this industry, it is appropriate for the overall materiality to be based on profitability of the company, and it is a key focus for the investors. So what they have actually asked us. So he have mentioned us that he have already got some information relating to the audit of Connolly Company, and he met with the company's finance director last day, and on the basis of which he have provided us with the number of issues that will affect the company's audit. And specifically, he have asked us to calculate the materiality. On what basis we have to calculate the materiality?
Profitability.
On the basis of the profitability of the company. We need to calculate the materiality on the basis of profitability. So, well, we need to calculate the materiality on the basis of profitability. And when it comes to the profitability, what will be the provided benchmark for profitability? 5% to 10%, right? Okay. And they have given us all the exhibit that we require to use while finding out the answer. So they have asked us to provide a briefing note. And in the briefing note, they have asked us to include significant business risk faced by the Connolly Company. They have asked us to prioritize the significant risk of material misstatement. So here we are just identifying the business risk. Here they have specifically asked to prioritize the significant risk. Then they have asked us to write the audit procedures in relation to the Cold Comfort brand name. Finally, they have also asked us to pick the ethical issues. And they have given us all this within their email. And they have actually asked us to respond back by using a briefing note. Okay. So the first thing is that whenever we get a 50 marks question, you should always try to include briefing note. So whenever you clearly provide the briefing notes format, you will be getting additional 2 marks of professional mark. As we seen in the last day's professional mark discussion area, for the purpose of using the briefing notes format itself, we will be getting additional mark. So do consider including that, and it's very easy to use that because we will be responding back to a partner's email. So you can literally use the same paragraph over there as well. Since we are responding back to an email, what will happen when we respond back to an email? To become from, and from will become to. So we need to write to Alice Stone, audit engagement partner, from audit manager. The subject will remain the same. Clear?
Yes, sir.
Okay. Because we are responding back to an email. So the to will become from and from will become to. Then this will be the way in which we will be providing the briefing note. Just give a heading for briefing note. And after that, include to, from, and the same subject. Just give an introduction and just go through this. This briefing note are prepared to assist in planning the audit of Connolly Company. Specifically, briefing note will evaluate business risk and risk of material misstatement to be considered when planning the audit of Connolly Company. Recommend the audit procedures in relation to the new brand acquired during the year. Finally, explain the ethical threat to our firm. So what are these? Have you seen the introductory paragraph somewhere before?
Requirement.
Right? So the same requirement can be directly be copy pasted to here within the introductory paragraph. So you can easily include these points to get sufficient mark in terms of professional marks. Clear? Okay. So just given brief introductory paragraph showing that the briefing note is prepared to assist the planning of audit of Connolly Company for the year end dash. And specifically, this briefing note will include just copy paste the requirements. So that will be the introductory paragraph. And at the end of the briefing note, you must also provide a conclusion whereby you can always use the same conclusion. This briefing note includes variety of business risk and risk of material misstatement identified during the audit. And all the business risk and risk of material misstatements have been prioritized mainly on the basis of unusual transactions, on the basis of possibility of fraud, possibilities of having management bias, on the basis of subjectivity, and so on and so on. And the audit team should definitely spend sufficient time on analyzing all the risks faced by the entity and should properly plan the audit in order to perform the engagement in an appropriate manner to provide a proper opinion on the company's financial statements. So just give a brief conclusion. So this introduction and conclusion can even be provided at the first phase itself so that you will be getting professional mark in regarding that. Clear?
Yes, sir.
Yeah. Then once after including the introductory paragraph, what should be the next most important thing that you have to include? It's with regarding the materiality. Yeah. So we need to calculate the materiality. So as we have already seen, the examiner has asked us to identify the materiality on the basis of the profitability of the company. So we have to trace the profit amount of the company. So what's the profit for the current year? It's 8,100 or 8.1 million, right? So it's 8,100. So what do we need to do with regarding this? We need to take 10% of it, right? 10% of it, which comes to 10%. 8.1 million, 10%.
8 lakh 1,000.
8 lakh.
10.
Yeah. And what will be the half percentage of it? 4 lakh 5,000. Okay. So do we need to consider taking the lower limit or upper limit here? Lower limit or upper limit? Lower limit or upper limit?
Upper limit.
Closed. Upper limit.
ആദ്യം നമ്മൾ എന്ത് നോക്കണം? നേരെ കയറിയിട്ട് ലോവർ ആണോ അപ്പർ ആണോ എന്ന് കൺസിഡർ ചെയ്യണം ചെയ്യാം. No. Well, before selecting lower limit or upper limit, we need to consider our factors, right? Justifications have to be considered here. What are the things that we need to consider? We need to consider whether it's a new client, newly listed client, management bias, corporate governance weakness, high risk of material misstatement, or internal control weakness. If any of these factors exist, then we might need to move to the lower limit, or else we can stick on to the upper limit itself. Okay. So you just consider whether any of these factors appears to be there in the situation. Since we haven't yet gone through the scenario, we can just assume that if any of these factors are not existing, we will just go with the upper limit, or else we will move down to the lower limit. Only if there is new client and newly listed client, only if it's a new client or a newly listed client, you should directly move on to the lower limit, or else you will start with the upper limit and trim down to the lower limit. Clear?
Yes, sir.
Yeah. So that's the same way in which they have also included here. So for the purpose of this briefing note, following overall materiality used for the assessing the significant risk has been based on profitability. You can use same sentence always. It doesn't mean that you need to by heart this. You can write it in your own words. Just mention that for the purpose of preparing this briefing note, we have decided to take the materiality on the basis of profitability, as the audit engagement partner have requested us to use the materiality. Then you have to provide the benchmark. It will be 5 to 10% of the profit. So the range would be 4,05,000 to 8,10,000. And they have taken the materiality limit of 7,50,000. Then they have mentioned that the benchmark is only a starting point for determining planning materiality and need to be applied when determining final level of to be applied during the course of audit. This is an existing client. No significant control issues have been noted at the planning stage. However, due to risk of management bias discussed, audit risk is deemed to be higher in the previous year. Therefore, preliminary amount of materiality is 7,50,000, which is appropriate at the planning stage. Materiality need to be revisited during the audit or later stage if information or testing indicate potential issues. So they have given us. But literally, these sentences are highlighted in the yellow color can be always be used for every question. The one which is highlighted in the green color only need to be changed, which means this is the justification part, and only justification part have to be changed according to the scenario, and the other yellow can be written in the same manner. So you can literally understand the meaning from the scenario and just write it in your own words. Clear? Manslayo? Now, green color justification and yellow color same use. Clear?
Yes, sir.
So literally you will be getting approximately around 6 marks for doing this much part, which means for including the introductory paragraph and following the briefing notes format, and for calculating the benchmarks as well as the materiality. Because for directly calculating the materiality and its related justification, you will be getting up to 3 marks. Again, for the briefing note and its format, you will be getting 3 marks. Sorry, 2 marks, maximum up to 2 marks. Again, for following the audit engagement partner's request and using the same materiality benchmarks as they mentioned in the scenario, you will be getting additional professional mark. So up to 6 marks can be easily be gained by doing this much. So always try to focus on the professional mark from this area. Okay, clear? Okay. And after including this much area, you can directly start with the business risk and the risk of material misstatement. As I mentioned earlier, just give a common heading for the business risk and risk of material misstatement and include all the possible business risk and risk of material misstatements under that. Okay. And let's just go through the, sorry. Let's just go through the examiner's comment. So the majority of marks for this question are for risk assessment. Business risk are risk that the company does not meet its strategic objectives. The issues management are concerned about. Explain the impact of the issue to the company's profit or cash flow. So this is what the examiner asks us. So well, we know that business risk are the risks that will affect the company's strategic objectives. So we need to consider about that, and we need to clearly show the impact that will affect the company's profit or cash flows. In addition to which, they have also asked us to include the risk of material misstatement. So when we include the risk of material misstatement, we need to refer to non-compliance with accounting standard, and we need to think about relevant standard that is required and what will happen if that particular standard is incorrectly treated. So that is what we need to provide as the risk of material misstatement. And as you can see over here, they have given us a briefing on how we need to calculate the materiality. The email from the engagement partner states that materiality needs to be based on profit. And therefore, our answer should always start with the calculation of materiality using the benchmark. And if it's a new client or a client which has control risk, or if the materiality should be set at the lower limit, or else if it's an existing client, and in that case, we can set the materiality to be at the higher rate if something is mentioned in regarding the same in the scenario. Clear? Is that clear, everyone?
Yes, sir.
Okay, just a moment. So, is it clear, guys? Still here? So, literally, we have discussed about the business risk, about the introductory paragraph, the way in which we need to calculate the materiality and show it within the answer. So, this is what we have just now. And now we will just do one thing. We will start with the scenario. We will select a sample of business risk. Later on, we will practice a full-fledged question. For the time being, we will just go through a sample scenario. Okay. So from the same scenario itself. So please do one thing. Just read the scenario over here. Just read up to here and try to pick the business risk and risk of material misstatement from this area. Okay. Everyone, please do go through the here and try to pick all the business risk and risk of material misstatement from this area. All done?
Yes, sir.
Yes,
Okay.
sir.
In the October 2014, Connolly Company began to sell into a new market, that of animal health. This has been very successful, and the same of veterinary, pharmaceutical, and grooming products for livestock and pet amount to approximately 15% of total revenue for 2015. Another success in 2015 was the acquisition of the Cold Comfort brand from a rival company. Products to elevate the symptoms of cough and cold are sold under this brand. The brand costs $5 million and is being amortized over an estimated useful life of 15 years. In February 2015, a contract with a new overseas supplier was signed. All of the company's packing is now supplied under this contract. Purchases are denominated in foreign currency and forward exchange contracts are not used. Okay. So what all are the business risk from the scenario for the time being? Business risk.
Diversification.
Enter the new market.
Okay, the company is diversifying into the new market, or they have already diversified into the new market. So what happens when a company diversifies their operations into a new market?
Significant amount of money spent.
Yes, exactly. The company might be spending significant amount of money in order to start the operations in the new market. And what will be the further risk? What will be the risk there? So automatically there can be chances that
Cash
the
flow
company
deficit.
might need to spend significant cash outflows on the investment, and they might not be able to meet the cash flow requirements in future, which would affect the company's working capital requirements and the operations of the company. Perfect. Then, do we actually need to mention while discussing the risk, before we have already discussed that when a company operates in a new market, there can be chances that they might not be able to achieve success as they might not be having much knowledge about the new industry. Do we need to mention that risk here?
No.
No. Why?
Already other successful ആണെന്ന് പറഞ്ഞിട്ടുണ്ട്.
Exactly, because they have already mentioned the scenario that the company is already successful. In that case, it's not required to be mentioned that. So whatever you write as the answer for the scenario, it should be purely be based on scenario. So you should properly read the scenario and should mention what is actually being considered as risk in the case. Okay. Then what else will be the business risk?
Brand acquisition.
Yes, the company is acquiring another brand for Cold Comfort. So what will be the risk there?
If the acquired brand name reputation affect, automatically it affect their reputation.
Exactly. Yeah. As they have already mentioned, this company, the Connolly company is acquiring the another company's brand name called Cold Comfort. So automatically, if they acquire another company's brand name, if the Cold Comfort brand has done something wrong in the market, automatically it might also affect the business of Connolly company as well. In addition to which, they might not be able to recover the expected return from their investment if the brand name is affected. And it will also create reputational damages for the existing operations of Connolly company. What else in the same case?
Significant investment.
Yes, significant investment, because they have already spent $5 million on purchasing the brand name. So the acquisition cost is very high. So they might again face significant cash flow difficulties in case of not having adequate fund. Clear?
Yes, sir.
Okay, fine. Then what else?
Reliance on a single supplier.
Reliance on a single supplier. Okay. And whether there is any add-on risk over there rather than just being a new supplier.
Overseas supplier.
Yes, it is clearly mentioned that they are an overseas supplier, right? So they are relying only on a single supplier, that to an overseas supplier. So when a company relies on a single overseas supplier, what will happen in that case?
Customers' bargaining power will be high.
Yes, the supplier will be having high bargaining power. So the supplier might increase the price of the product in case of lack of adequate raw material available in the market, which would result in paying high amount of purchase cost for the products which the overseas supplier providers. In addition to which, what we can mention, since it's an overseas supplier,
Gain.
Foreign
Supply.
exchange.
The transportation cost for the import of goods will be significantly high. So the profitability or the margin of the company might be reduced. Again, since they are supplying from an overseas market, in case of any delay in the supply process, will result in
Stockouts.
stock out and meeting the customer demands, and the customer would be dissatisfied and they will not be willing to continue with the trade contract with customer, company. Okay. What else from the same area? What else from the same area as business risk?
Foreign exchange issues.
Foreign exchange issues. Definitely you can refer to the foreign exchange issues as it's an overseas supplier. In case, and especially it's mentioned that the company is not using forward exchange contracts. Therefore, the price of the product will be volatile and definitely it will affect the profitability of the company as the company will never have a specific profit, as the profit will always change according to the changes in the exchange rates. Exactly. So this is how you need to explain the business risk from the scenario. Then again, you need to pick the risk of material misstatement. So what all are the risk of material misstatements that you can directly identify?
Segmental reporting.
IFRS 8 segmental reporting. So we have already read the introductory paragraph and it was clearly mentioned in the introductory paragraph that it's a listed company. In addition to which, is there something that they specifically show us to prove that it's a specific segment?
50% of revenue.
15% of the total revenue. As we know that, as per IFRS 8, a particular segment can be treated as a individually identified segment only if it have got more than 10% of the any element of the financials. And since they are having 15% of share of total revenue, they can consider it as a separate operating segment for which adequate amount of disclosures have to be provided within the company's financial statements. And what will be the risk in that case?
Adequate amount of disclosures may not be.
There can be chances that the company might not have provided adequate amount of disclosures in the financial statements, leading to material mistakes in the disclosures of the financials. Clear? Okay.
Yes, sir.
So always keep in mind, whenever you write a business risk of material misstatement, you must clearly mention materiality if it's actually required. Since it's a disclosure, it's material here. Then again, you need to provide the actual accounting treatment required, what will go wrong in accordance with the scenario, and finally, you have to show the impact that will be created over the company's affairs. Clear?
Yes, sir.
Clear, everyone? Yeah. And then what else is the risk here regarding the risk of material misstatement?
Brand
acquisition.
Yes, they have acquired a brand called Comfort. So, which is the actual accounting treatment required there?
IAS 38.
IAS 38 intangibles. As per IAS 38 intangibles, what should be the accounting treatment for the case?
Brand should be capitalized.
Brand should be treated as an intangible asset and should be capitalized. Then
should be amortized over its useful life.
And it have to be amortized appropriately over the useful life of 15 years. What will be the related risk there? In case of brand name, yes, there can be chances that the company, might have taken an inappropriate useful life. And if the inappropriate useful life is taken, then automatically there can be chances that
amortization expenses will be
there can be chances of having inappropriate amortization made. Value of asset will be under or overstated. Then, what else is the risk in relation to the new overseas supplier?
Forex.
IAS 21 foreign exchange issues. And what do you need to mention with regarding the foreign exchange risk? How do you need to account when we have a foreign overseas supplier? All the purchases made from the overseas suppliers should be recognized at the spot rate. And what will be the risk in that case?
Inappropriate
exchange rate.
The company might have used inappropriate exchange rate, which would result in incorrect purchase and payables being recorded. And at the year end, what we need to do?
Retranslate the monetary.
It must be retranslated. The amount of liability should be retranslated to the year-end closing, right? And the exchange gain and losses have to be recognized within OCI or the P&L, where
Yeah.
should be recognized within the P&L. And what will be the risk in that case?
They might not
They might not
They may have
have
recorded within the
OCI.
OCI, which would result in
Under or
under or overstatement of the profit. Okay, under or overstatement of the profit. In addition to which, you can also consider additional risk that there can be chances that the amount might not be retranslated at the year end also. Okay, clear?
Yes, sir.
So this is the way in which you need to pick both the business risk and risk of material misstatement. Is there any doubt in relation to the area that we discussed? Is that clear, everyone? Paka?
Yes, sir.
Yes, sir.
Okay. So these are one of the two main areas. And whenever you appear for the exam, you must always keep one of the main thing in mind, that whenever you provide answers for the 50-mark questions, the most important thing to keep in mind, the 50-mark question is not just about risk. I always used to mention you that the 50-mark question is not just about risk. Only one part of the question is being asked with regarding the risk, but the most majority of mark will be for the other areas, which includes the audit procedures, ethics, and additional information. So always give equal importance for risk as well as the area in relation to audit procedures, additional information, and ethics, because most majority of cases, students will spend sufficient and more time and unnecessary time on writing the answers in relation to the risk, and they will skip the other elements. And after the exam, while waiting for the results, they will always think that they have done almost main part of the 50 marks and they have only left some areas in relation to the procedures and ethics. But these areas itself might weight sometimes more than 50% of the 50-mark question. So automatically, if you have not attended this part, then possibility of getting a good mark is very low. So always spend only actual time available for the area of risk, which means if you're getting a 20-mark question, 20 into 1.8, just spend only 36 minutes for the audit risk area. Rest of the time should be properly apportioned for other areas of the 50 marks. Or else you can also do one thing. After reading the whole question, we can immediately start with the area of ethics as well as the audit procedures area, and then start with the area of risk. And after that, move on to the area of additional information, because additional information can be included only on the basis of risk that you identify. So instead, you start with the audit procedures, then ethics, and then include the risk. However, since you are having a computer-based exam, you can always amend whatever things are being included within your answers. You can just copy paste or cut paste, or you can do whatever you want. So you can always use that particular benefit while writing the answer, since it's a computer-based exam, but always apportion proper time for each areas of the 50 marks question, and do not unnecessarily spend much time of the exam for your risk area. Okay. And especially whenever you read the question, always try to understand whether it's a question based on audit risk or risk of material misstatement. And keep in mind, when you write the risk of material misstatement, you should not write anything relating to detection risk, because unnecessarily you will waste the time and you will not get any marks on that, especially when you write the points on a new client. So if it's a risk of material misstatements question, and if it is mentioned that it's a new client, you should never mention to detection risk. Instead, you can mention about the possibility of having opening balance being misstated, as we are not familiar with the prior year closing balance. So always read the requirement as well as the scenario properly, then start with the answering part. Clear, everyone?
Yes, sir.
Yeah. So one of the most important area for our 25 marks as well as for the 50 marks area is the area of ethics, because it's a definite question for the 25 marks area as well as for the 50 marks area. And even with the reporting part, critical appraisal areas, matters to be considered before accepting an engagement, in the area of ethics, same ethics, quality control question, in all these questions, there can be chance of having presence of ethics. So let's start with the ethics now. So we'll quickly brush through the area of ethics. So I believe you might have already read the notes on ethics. In case if anyone have not yet received the notes, I will share it now. I will share it immediately after the session. And as I already mentioned the last days, session also, if you want any of my notes, you can just search it directly in the Google. You can download it from our website, or you can also download it from any of the third-party websites. So basically, when it comes to the area of ethics. So what all are the fundamental ethical principles that have to be followed by every ACCA? What are the fundamental ethical principles?
Integrity, objectivity.
Integrity, objectivity.
Confidentiality.
Confidentiality, good.
Professional behavior.
Professional behavior.
Professional competence and due care.
Professional competence and due care. Yeah. Then, so these are the 5 fundamental ethical principles that have to be followed. Basically, when it comes to your AA exam, it was a direct, straightforward question where the examiner will be asking you to mention, list down and explain the fundamental ethical principles. However, here in this your AAA paper, you might be asked to identify the professional issues that the auditor faces while performing the audit. So to identify the professional issues, you need to understand the professional ethical code of conduct that have to be followed by each auditor. So it includes integrity, objectivity, confidentiality, professional behavior, professional competence, and due care. So what do you mean by integrity? Integrity. What do you mean by integrity?
Forward and honest.
Yes. Whenever an auditor spends time on an audit, they should always be straightforward and honest in all their professional and business relationship. Then what do you mean by objectivity? They should never be biased. They should always perform audit in a professional manner. They should not be influenced by anyone. That is objectivity. So if there is any ethical threat, maybe self-interest threat or self-review threat, or if sometimes it's mentioned that my wife is working with a client company, in all those cases, automatically objectivity of the auditor will be impaired. Then what do you mean by professional competence and due care? Professional competence. Sorry? Malayalathil പറഞ്ഞാൽ എന്താ professional competence? നമ്മൾ എന്ത് ചെയ്യണം? Knowledge updating. So we should always spend time on updating our knowledge. That's the first thing. Whenever we provide a service to a client, that should be based on most updated standards. And third, before accepting work of a client, you must think whether you have got sufficient knowledge, and you should accept the work only if you have got proper knowledge with regarding the work. So these are the 3 things. Okay. First of all, you should always keep on updating your knowledge. Number 2, whenever you accept the work, you should consider whether you have got sufficient knowledge for performing that task. Again, before performing every engagement, you should ensure that you are performing that engagement on the basis of the most updated standard. Clear? Yeah. Then when it comes to the confidentiality, there are 2 things that are being mentioned within the confidentiality area. First thing, you should never disclose an information obtained from a client to a third party. So if you have got any information with regarding the client during the course of audit, you should never disclose that to the third party. That's the first thing. Secondly, if you have got an information from a client company, you should use that information only for the purpose for which you have actually obtained that. So എന്തിനു വേണ്ടിയിട്ടാണ് ഇൻഫർമേഷൻ വാങ്ങിയത് അതല്ലാതെ വേറെ ഒന്നിനു വേണ്ടി യൂസ് ചെയ്യാൻ പാടില്ല. അതുപോലെ തന്നെ ഒരു ക്ലയന്റിന്റെ ഇൻഫർമേഷൻ കിട്ടിക്കഴിഞ്ഞാൽ വേറെ ആരുടെ അടുത്ത് കൂടെ കൊടുക്കാനും പാടില്ല. That's confidentiality. And finally, what do I mean by professional behavior? What do you mean by professional behavior? Okay, you should never perform an act that may discredit our professional body. There will be multiple acts that will be performed by the auditor. You should always be complying with the law and regulation, and you should never do something that may discredit our professional body. That's a professional behavior. So these are the factors that you need to consider with regarding the ethics. So you must follow integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Let me ask you guys, if it is mentioned in the scenario that the auditor have advertised their service and the advertisement is discrediting some other professional. So what kind of professional issue will it be?
Professional behavior.
Yes, it's again, it's a professional behavior, right? Because as per professional behavior, we should not do anything that may discredit the profession. So if we advertise in a manner that discredit any other professionals, it's again, it's a professional behavior. So consider that we are performing the audit of 2 competitive entities, and the auditor have provided information in relation to a competitor to the other entity. So what kind of fundamental ethical principles breach it will be?
Confidentiality.
Confidentiality. Exactly. Consider that the auditor's wife is working in the client company and auditor is providing some report in favor of her, favor of his wife. So what kind of ethical threat it will be? Objectivity. It will affect the objectivity. Consider that the auditor is not following appropriate accounting or auditing standards. Maybe, as we have already learned in the standard ISA 320, auditors should determine the materiality at the planning stage, and thereafter he should always keep on reviewing the materiality and should update it whenever necessary. But our auditor have fixed the materiality at the planning stage, and he is using the same materiality throughout the audit. What kind of issue that would be?
Professional competence and due care.
It will be against the professional competence and due care. Good. Then consider that if the auditor's brother is working in the client company, or auditor's brother have provided a service to the client company which contains a misstatement, and the junior auditor have reported it to the audit engagement partner, the same issue, and the engagement partner is telling the audit junior not to mention the same issue to anyone else. So what would be?
Integrity and objectivity.
Integrity and objectivity, because he is acting in favor of his brother, that's objectivity, and he is not taking it in a straightforward manner, it's against the integrity. Clear?
Yes, sir.
Yes,
So
sir.
this is how you need to consider the fundamental principles ka breach while performing the audit engagement. Is that clear, everyone? Paka?
Yes, sir.
Yes, sir.
Yes, sir.
Yeah. Then we have studied that there are mainly 5 fundamental ethical issues. So which includes a self-interest threat, self-review threat, advocacy, familiarity, and intimidation. Again, one more time, what are all the ethical threats? They will be self-interest threat, self-review threat, advocacy, familiarity, and finally, intimidation. So how do we need to consider this? So when it comes to the self-interest threat, if it is mentioned in the scenario that anything that might affect an auditor's personal interest more than professional interest, that will be considered self-interest threat. So if the auditor is giving priority for his personal interest rather than giving importance for the professional interest, it can always be considered as a self-interest threat. Consider that, as we already studied, if the auditor is getting any family or personal relationship with the client company, if there is any gift and hospitality service being provided to the auditor by the client company, if the auditor have taken any loan from the client company, is provided any loan to the client company, both cases auditor might be getting concerns on the recoverability of the amount. If there is any overdue fees that the client need to pay in relation to the prior engagement, auditor might be having a fear that that particular payment might not be made. So the auditor might provide favorable opinion, or there can also be chances that if the auditor actually believes that the client will not be willing to provide overdue payments to him, then automatically auditor might reduce the quality of the current year engagement. If the auditor is getting payment on percentage or contingent basis, and if the auditor gets 5% of the profit as his payment, and if the profit is overstated, auditor will never be interested to correct the amount, as it will also reduce the revenue for the auditor. Then high percentage fee. How do we consider the high percentage fees? For 2 consecutive years, if the auditor gets more than 15% of the total revenue from a single client. For 2 consecutive years, auditor is getting more than 15% of his total revenue from a single client. That client can be called as a high percentage client. And if it's a high percentage client, automatically the mistakes possibility is very high. So, which means we might act in favor of the client company because we might never be interested in losing that client. So it will create self-interest threat. What do you mean by lowballing, guys? Lowballing?
Quality reduction.
Yeah, the auditor will, first of all, the auditor will reduce the price of, cost on the price of the engagement, right? Auditor will reduce the price of providing engagement, and later on auditor will also reduce
The quality of the
engagement proportionally. So reducing the audit fee and reducing the quality proportionally will be considered as lowballing. And if the auditor have recruited any employees in the accounts department of the client company, we will never talk against such employees as we have appointed them. If the auditor have got a financial interest in the client company, like any sort of investment, like in terms of debentures or in terms of share, if I am a shareholder of the client company, and if I have discovered a mistake in the client company's FS, and automatically I know that if it is known to the public, share prices will go down. Definitely, I will never be intentionally willing to take such a loss in my investment. So it will create self-interest rate. If me and client is having any sort of close business relationship, or if I have already worked with the client company, or if my audit firm's one of my partner is working in the client company's board, in all this situation, it will give rise to self-interest rate. And we should take adequate safeguards for all this sort of self-interest rate. So let me ask you guys, what do we need to consider as a safeguard if there is a family or personal relationship for a particular person in the audit team? If there is a family or personal relationship for a particular person in the audit team, what do we need to do in relation to that?
Remove that person from the team.
We need to remove that person from the engagement team. So if the auditor is being offered with any sort of gift or hospitality service by the client, what do we need to do?
Politely decline.
Politely decline the request made by the client company, or politely decline whatever the offer being made by the client. If there is any loan and guarantee, what we need to do? We need to consider, first of all, whether it's a financial institution. If it's a financial institution and if it's their principal course of action, will there be any specific risk?
No.
Yes. Still, you have to consider whether it's a loan repayable on demand. If it's a loan repayable on demand, definitely there will be the same risk again, right? Because if you provide an inappropriate opinion, if you provide an unfavorable opinion, they might ask you to pay the whole amount of loan back. And because of that fear, you might provide a favorable opinion for them, right? Yeah.
Yes.
Then, in case of overdue fees, what you need to do as a safeguard?
We should request the client to pay the amount first.
Okay. And what do you need to do as an action if the client haven't paid the amount?
We should immediately stop the...
You should immediately stop continuing with the engagement. So simple. If there is any outstanding fees, you should never continue with the engagement until the outstanding fees are being settled off. Then what if we are getting a payment on percentage or contingent basis?
We should not accept that kind of fee.
Okay. So to whom we should communicate the same thing with? We should communicate the same thing with the clients, those charged with governance, and should inform them that the fees will never be based on percentage or contingent basis. Instead, what do we need to do? Fees should be fixed.
Either a fixed rate or an hourly rate
should be a fixed rate or an hourly rate. And if they are not willing to do that, we should never continue or accept the engagement. Then, if we are getting a high percentage fees, is there any problem of getting high percentage fees? If there is no problem there is no problem until you are not compromising the quality of the engagement. So what do we need to do? If there is some things that will affect the quality of the engagement, you can always consider taking an external review of the work done. Clear?
Yes.
And what if there is possibility of lowballing? First thing, you should never fix a fees that is low enough that will never cover the cost incurred for the audit. So you should fix a fees only that is sufficiently enough to cover the cost incurred for the audit engagement. And if there is something that you believe will affect the company's audit engagement's quality, you should consider taking external review of the work done. And what if a particular member of our audit team have recruited a client staff member? What do we need to do? That particular person who helped in the appointment process should be removed from the engagement team. Then what if there is any financial interest for a particular person, maybe for the audit engagement partner?
Sell off all the interest.
They should dispose or sell off all the financial interest before being involved in the engagement. Yeah. And other cases, when there is close business relationship, employment with the assurance client or partner on the client board, that particular person have to be removed. So what do you mean by self-review thread? Well, it is very easy to understand the self-review thread, right? And very easy to pick from the scenario as well. Because whenever there is a possibility that we have performed any of the services for a client company, which might be relating to the client company's financial reporting, that can be considered as a case for self-review thread, right? So if something is mentioned in the scenario that shows that you have already been involved in the client company's financial reporting related tasks, it would result in self-review threat. What about the advocacy threat? Advocacy.
Representation of the client.
Yes, you might be representing the client company at any point, then that gives rise to advocacy threat. Sometimes the client company might be asking you to represent the client company for getting a bank loan, or they might be asking you to present the company's financial statements, maybe for any board meeting or for any other kind of shareholders meeting. In that case also, it would result in advocacy threat. And when it comes to familiarity threat, the familiarity threat will always be incurring purely on the basis of long-term association with the client. Suppose consider that you are being working for the client for almost more than 7 years as an auditor, or you have already provided some other non-assurance services to the client company earlier, or you might have already been employed with the client company before. In all these situations, there can be chances of having familiarity threat. And when it comes to the intimidation threat, we have already studied that intimidation threat will be arising in 3 cases. Which all are the cases? Coercion, undue influence, creating limitation in the scope of audit. What do you mean by coercion?
Threatening.
Yes, somebody is threatening you. Like maybe they might be asking you to provide a favorable opinion, or in case if you're not willing to provide the favorable opinion, they might file some sort of litigation against you, or they might be torturing you in some other manner, or they might be telling you if you don't provide them with a favorable opinion, they will not be willing to pay the audit fee on time, or they might not provide you with some other non-assurance related services, or they might replace you in the upcoming year's audit, or if in any manner they intimidate you, it would result in coercion. What about the undue influence? Undue influence. Undue influence. What do you mean by undue influence? And then undue influence? If there is something or somebody who has the ability to influence you on the basis of the authority that they have, or on the basis of the power, or on the basis of love or care, it can be called as an undue influence. Suppose consider that if my senior, who was already being there in my employment, who was already being there in the audit firm, have recently joined the client company. So when we go for the audit with the client company, automatically that same senior person is there in the client company. So he's having authority over me. So definitely he might be able to influence me. In that case, it would result in intimidation threat. Clear? In the terms of undue influence. Is that clear, everyone?
Yes, sir.
Yeah. And finally, creating limitation in the scope of audit, which means maybe you might not be getting access to all records. The company is not giving access to the finance director. They might not be giving access to communicate to any of the specific employees. They're not informing you about the client's stock count dates. They're not giving access to the company's warehouse. They're not giving you the records of the inventory. They're not letting you know about the company's assets or any other issues. Or sometimes there can also be chances that they might be giving you a very low time for audit to be carried out. So they might be rushing you to carry out many of their works. They are asking you to perform the audit in a non-disruptive manner, which in a manner which doesn't affect the company's day-to-day operations. Or in any manner, if you are not getting sufficient time to perform the audit in accordance with the scope of the engagement, you can always mention it as intimidation threat. So these are the situations which will give rise to intimidation threat during the course of an engagement. So these are the 5 direct ethical threats that an auditor will face while performing the engagement in relation to a subjective client. So there is self-interest, self-review, advocacy, familiarity, intimidation. Out of which you can clearly segregate 2 threats. The first one is self-review and the other one is intimidation. Sorry, the other one is advocacy. So basically when it comes to self-review threat, it will arise only if you have provided a service to the client company, or if the client company is additionally requesting you to provide any of the non-assurance service for the assurance client. In that case only, self-review threat will arise. And same manner, advocacy threat will arise only if you represent the client company at a point. The connected threats are self-interest, familiarity, and intimidation. Because if there is any sort of family and personal relationship, it can result in either self-interest, familiarity, or intimidation. But always keep it in mind, if the auditor is also expecting a personal benefit or a personal gain, then only it will result in self-interest. If it is just because of the familiarity between two persons, maybe the auditor and the client company CEO is going together for a movie, or the auditor is being invited to the client company's director's son's marriage, in all these cases, it will only result in familiarity threat rather than creating self-interest threat. And also, if a person influences in such a manner that an auditor need to change the audit opinion, due to that wrongful influence, it would result in intimidation threat. So this is how you need to distinguish between intimidation, self-interest, as well as familiarity threat. So when it comes to paper AAA, you can always explain it in your own manner, that you only need to provide clear justification for providing each of the threat. And if your justification is appropriate, definitely you'll be getting marked for that risk. Clear? Is that clear,
Yes,
everyone? Okay. And one of the most specific threat that is there in our AAA paper is a management threat, which was not much there in our paper AA. So what do you mean by management threat? What do you actually mean by management threat? What does it actually mean?
When the auditor acts on behalf of the management.
Yes. Well, we know that the management might be having many responsibilities that need to be carried out in relation to the audit engagement. And in many cases, the auditor might assume some of the management's responsibility as auditor's responsibility. So in such situation, we can call it as a management threat, right? Maybe say, for example, well, we know that it is the responsibility of the management to carry out going concern evaluation. However, in some cases, the auditor might perform going concern evaluation. And in that situation, it would result in management threat. Again, it is the responsibility of the management to represent the client company to a bank in order to take a new bank loan or to negotiate the bank loan's terms. And if the auditor appears to be the person who represents the client company, in that case also, this particular situation would result in management threat. Clear, everyone?
Yes, sir.
Okay. And mainly, we have studied about one of the most important threat. That's auditing multiple entities in a competent market. You have to clearly read the scenario. It may be mentioned in the introductory paragraph that the client company is operating in pharmaceutical industry. And at the end of the scenario, it may be mentioned that the auditor is also responsible for another entity's audit, which is also operating in pharmaceutical industry. And they might ask you with regarding the ethical threat and the safeguards that you have to adopt in that case. Always keep in mind, when we audit multiple entities in a competent market, like Apple and Samsung, or when we audit entities that trade with each other, the Intel, the processor manufacturing company, and the Samsung. So whenever there is a confidentiality issue, which means there can be chances that one of the competitors' information might be provided to the other competitor, maybe intentionally or unintentionally. So in that case, if we are auditing multiple entities in a competent market or entity that trade with each other, there is always a possibility that there are some factors that might affect the objectivity and confidentiality of the engagement. So in that case, you must always case an important safeguard. First of all, you need to obtain permission from both the clients. After you get permission from both the entities, you have to take additional safeguards, which includes you have to use separate engagement teams for the audit. You have to take appropriate procedures to prevent access to the information. You need to sign the confidentiality agreement for the team members. Then this application of safeguards should be reviewed regularly by a senior official. In addition to which, if the client is having any concerns with regarding how we maintain independence, the client should be advised on independent related matters as well. And if these particular safeguards are not being properly implemented by the auditor, then the auditor should never consider continuing with the engagement or should resign the engagement immediately upon understanding the fact that they will not be able to implement the safeguards. Clear?
Yes, sir.
Okay. If we need to audit multiple entities in a competent market, what are the safeguards that be taken by the auditor? First safeguard, which includes
Permission from the client.
Obtaining permission from both the client companies. And after that, if the client provides the permission, what are the additional safeguards to be taken?
Separate engagement
teams should be used. There should be procedures to prevent
Confidentiality.
access to information confidentially. Agreement should be signed. Then safeguards should be applied and that should be reviewed by a senior person.
Independent review.
Then independence advice should be provided to the client company. And what if we are not able to implement the safeguards?
Resign from the
We should
engagement.
decline and resign from the client engagements. Clear, Paka?
Yes.
Perfect. Then we have studied appropriately that the maximum period for continuing with the client company's engagement would be 7 years, right? 7 years should be the maximum cumulative period. And after that, how much should be the cooling off period that have to be taken by the each auditor? Engagement partner. For the engagement partner, what will be the cooling off period?
5 years.
5 years. For the engagement quality control reviewer?
3 years.
3 years. For the key audit partner, it would be?
2 years.
2 years. And what if we perform multiple roles? If there is a role which includes a key audit partner, it will be always
3
years. And if there is a role which includes engagement partner, it will be always 5 years. Exactly. So this is what we need to consider while writing the ethics related matters. And I have already taught you that whenever you identify ethical threats, you must be always providing safeguards in relation to each of the ethical threats identified. So these were the common safeguards which we have already discussed, like using separate engagement teams. But for the listed entities, we cannot do that. Always keep in mind, when we audit a listed entity, we should never provide any other services when we provide the audit services to them. Then whenever there is an issue with the ethics related matters, we can discuss that with the clients, those as with governance and audit committee. We can obtain advice from professional bodies such as ACCA. If there is something that affects the familiarity, then we can consider removing that person from the engagement team. And if it is an engagement partner, we can rotate him. Then if the company have got any of the if the auditor have got any of the interest in financial interest in the client company, then we can consider disposing of the shares immediately. Then if any of the safeguards are not properly operating, we can consider resigning from the engagement as a last option. Clear?
Yes, sir.
Okay, fine. Perfect. So this is what we need to consider as a safeguard. And everyone, while writing the answers, always keep it in mind. Whenever you write an ethics related issue, always identify the ethical threat from the scenario. Then you must explain it, how it becomes a particular ethical threat. And finally, you need to always provide safeguard. So normally you'll be getting maximum of 2 to 3 marks while writing the ethical threats. And to get that marks, you should always clearly provide the safeguard. You will get the marks only if you clearly provide the safeguard. And while identifying and explaining the threat, you can also show the significance of threat, because all the threats are not always significant. So you can also explain whether that threat is significant or not. Again, I have already shared your notes on ethical threats. I will share the same file again. So basically, I have listed out some of the ethical threats that normally used to be appear in most of our exams. And this is also based on the past answers. So you can make use of this file as well, ethical threats and safeguards. And within the ethical threats and safeguards, we have included common ethical threats. Like it may be mentioned in the question, like you are being asked to provide an advice on the accounting and management information system, or they might be asking you to provide, they might be asking you to appear meeting with a bank, or they might be asking you to investigate the tax related issues, or the audit firm might be asking you to, client company might be asking you to join with their audit team, or you might be asked to review the client company's internal control system. And all these cases, there will be ethical threats. So all the ethical threats are being provided, and in italics, I have included the safeguards that have to be adopted by the auditor. So you can just go through this file. This is just 8 pages. So while going through this, you will be able to get the way in which you need to write each of the ethical threats, as well as the safeguards in relation to each of the threats. Clear? Is that clear, everyone?
Yes, sir.
Okay. Is there any doubts in relation to the areas that we already discussed now?
No, sir.
Okay. So we have properly discussed on the ethical threats, in addition to which we have also considered the area of business risk. And we have also discussed on the risk of material misstatements as well. Yeah. So one more time, while writing the audit risk with accounting treatment, what are the factors that we need to consider? We should include the materiality, accounting treatment, what will go wrong. That should be on the basis of scenario plus accounting treatment. Finally, we should show the impact on FS. And while determining the materiality, what are the factors to be considered? We need to consider whether it's a new client, newly listed client, management bias, corporate governance weakness, high risk of material misstatements, and internal control weakness. In addition to which, while writing audit risk without accounting treatment, we should identify the risk, explain it, and show the impact on the financial statements. And we have also studied about the criteria for determining that particular risk is significant or not. So what was the criteria? First, we need to consider whether there is any possibility of fraud, then economic accounting or other developments. Subjectivity of the area can be considered. We can consider whether there is any unusual transaction. Then related party transaction. We can also consider the possibility of having complicity of the transactions. And we have also discussed on how we need to provide the answers in relation to each of the 50 marks question. First of all, we need to include the briefing note, which would be in the same manner in which we get the email. And we need to provide an introductory paragraph, whereby in the introductory paragraph, we will be literally mentioning the requirements again. And after that, we need to provide an introductory paragraph for the materiality. Benchmark should be mentioned. And the benchmark, in addition to the benchmark, the justification on the basis of which we have determined the lower or upper limit have to be considered. And at the end of the answer, we should also provide conclusion. Clear, everyone?
Yes, sir.
Okay. So everyone, please do one thing. So we have actually practiced some area of the question Connolly Company. So if possible, after going through today's areas, definitely consider doing the question on Connolly Company. And do ask me question in case if you have any concerns with regarding the same Connolly Company's question in the next day session. Okay, clear?
Yes, sir.
Okay. So please do revise the area of audit risk, risk of material misstatement, business risk, and ethics. And as I mentioned earlier, you may download the same notes either from our group or directly from the Google. And please do go through the files and do ask me in case if you have got any doubts in the next day session. Okay?
Yes, sir.
All right. So all the very best, everyone. Do well and prepare properly for the upcoming exam. So that's it. Thank you so much. Bye.